Speaking of commodities, we got some commentary on that from the incoming NEC director, Larry Kudlow, who said, buy dollar, sell gold.
Right.
What do you think of that as an investment idea?
Look, I think that, ultimately the dollar will strengthen. A lot of the turbulence in the near term is coming from the rhetoric from the White House.
Do you think that's going to abate?
Oh, no. No, but the rhetoric changes. So, we won't be, I'm not so sure we'll be hearing the same rhetoric around the dollar. Of course, the one big issue here is the tariff issue. And, one thing that I think that, Washington is having a hard time understanding is the trade deficit is the other side of the capital account surplus. And so if we're expecting to sell $1 trillion worth of U.S. government debt, and we have an economy that generates $600 billion of savings, then the continued reliance upon foreign capital to buy our debt is going to put pressure on increasing the trade deficit, and that's just a mathematical reality. And that, of course, should put pressure on the dollar downward. But I think that as short-term rates rise, ultimately that will carry the day and the dollar will rise.
So we have government debt, obviously that's a concern. We had household debt, a big concern in the last recession. Right. For this 2019-2020 recession that you say could be in the pipeline, you believe corporate debt will be the trigger here. Right. How do you play that then? How do you position for that? Well,
I think first off, in fixed income, people should be dramatically upgrading the quality of their portfolios. It's time to get out of high yield. Bank loans typically perform fairly well at this phase, but at some point you should be out of it. Investment grade corporate debt, I would get out of. And again, I go back to what I was saying to Joe. The place to be is at the long end of the yield curve. Of course, there's a lot of price risk out there. So, you need to mitigate that by buying, some short-term assets like treasury bills or floating rate securities.
I just want to make sure I heard you right. Get out of investment grade corporate debt as well as high yield.
Yes. You're not being compensated. You look at the spreads on investment grade corporate debt, we're within 40 basis points or 0.4% of the all-time low versus U.S. Treasury. Yeah. Yet, right, we're 600 basis points tighter than where we were in the financial crisis. So there's a lot of room, it's an asymmetric risk at this point.